That's why I call it the four seasons of Bitcoin, and explaining it, how it works in a 4-year cycle, just like stock market works in a 10-year cycle, and real estate has their own cycles, 10 to 18 years in different markets. But no, I think this had nothing to do with the ETFs. I think this was all about Japan primarily. They raised interest rates from zero, by the way, to 0.25. So they were still by far and away the lowest interest rates in the world. But they need that to have that because they're at almost 3 times their GDP in debt. And there's this thing called the carry trade, where a lot of sophisticated Wall Street investors were going and borrowing against borrowing in yen in Japan, and then buying T-bills with it. And it was sort of an interest play that they could make money on that. And when all of a sudden, interest rates went up a little bit, and then the yen got stronger, people got wiped out, and it just is this rolling, wave of liquidations where people had to sell their assets, including crypto. And, this happens when you're not, sort of properly balanced if you're going, into leverage on different assets. But
Yeah.
if you look at the ETFs, it was the institution selling. It wasn't ma and pa, retailer from their panic selling from their IRAs. The IRA, portion of the ETFs, as has been widely reported, has not started yet. This is still mainly institutions buying these ETFs. And so now that Morgan Stanley is going to be unleashing their sales force, and other big banks, investment banks, are going to follow,